everybody, welcome to the closing beat. Sorry, it's not live today. I actually couldn't figure out what was going on there, and it just occurred to me I could record this instead, so I don't have to deal with it. Anyways, welcome to the closing beat. This is brought to you by Jazz Wealth Managers. We're financial advisors. That's what it says on the shirts right there. We manage your retirement accounts, help you with that. But we're also an education firm where we teach you as we go. So if you have an interest in learning about investments, retirement, things like that, or what happened to the stock market today, well, we also like to cover those things and teach you along the way. We do that with our classes that we do once a week, except for next week because it's Thanksgiving. But we do those classes to teach and help, and of course, we're here for you along the way. Well, let's dive right into the markets. I'll make this one a short one so we can get it uploaded for you because what an active day, right? So markets off to the left-hand side here, you can see the Dow was lower by 2.3%, the S&P lost 2%, the Nasdaq lost almost 3%. And look, there's a couple things that we always say about the stock markets. You need the banks and you need the tech stocks, mainly the semiconductors, to head lower or to head higher if you want the markets to head higher. Today, we did not get that. We had the bank stocks selling off and primary front and center in the news. And we also had the semiconductor stocks selling off a little bit, well, a lot as well. So let's go over that. If you're brand new joining us here off to the left, that is the chart of the markets for every 5 minutes throughout the day there. And you can see that they basically stayed at lows all day. We'll go ahead and cover that as we go. We'll dive right into this thing. Here's a picture of the Dow, and we said last week every day, well, towards the end of the week there, if the markets did pull back, you sort of wouldn't mind. It would be okay if they took a break. You just didn't want it to happen fast. Well, today is the definition of fast, right? You prefer not to have things fall like that. Now, if you go back in time and you kind of look back at this January, February sell-off, you know that it wasn't smooth sailing afterwards. We had a huge sell-off. We had a big old back and forth kind of rally as it fought its way back up there, and then we had a huge sell-off again. Now, interestingly, it took time for it to repair itself, build a new downtrend, have everybody concerned about what was going on there, and then finally just work its way out. See how sloppy that is right there? So, what are we doing over here to the right? Well, we're essentially building that same picture again, potentially, with this being the high, and now we have a really solid high in there. Investors are going to use that high of, well, last week because the way we pulled back off of it here. So I'll color this maybe a different color that's a little more friendly. And so there you go. So there's our new downtrend, just like we kind of talked about over here through that February, March thing. What I want you to know is, in the Dow at least, not a quick recovery. I've been saying that as we sold off. You do not expect this thing to just rip roaring back up to highs and everything to be okay. So the pullback today, while not exciting, is also not so horrible. You're going to have the same picture here on the S&P 500. There we go. If we draw a little downtrend line there, technical traders and all the algorithms and the computers that look at downtrends, they're going to use the exact same thing. So this line will stay with us for a little bit. And for that reason, I will color that one a little friendlier as well. So we've got a potential downtrend here, all which could be in the midst of a perfectly strong and healthy markets, by the way. But look back over here again through February, March, and April. Just a hot, sloppy mess, right? And you expect it to sort of do that again over here. So a lot of back and forth. We'll be watching the technical support and resistance areas, of course. But let's dig in a little bit deeper for everybody else. We say you need the banks. If you want the markets higher, you need the banks. Here's a picture of the banks today. They lost 2%, mainly because of Goldman Sachs. If you look at Goldman Sachs, it broke to new 52-week lows. One of the worst performing banking stocks out there this year. New 52-week lows. They had some news out of Malaysia that they want their money back, but you can see the pullback here on that one. When Goldman Sachs loses 7.5%, the markets will not be higher for the day. JP Morgan sold off a little bit too. This is sort of a normal pullback, 2% decline. We go over to Bank of America, you got a 2.5% decline. You go to Morgan Stanley, that's a little worse. This is also one of the worst performers there. And so you can kind of see banking sector as a whole today, very weak. And because of that, you weren't going to have a strong market. Now, the other side of that is the tech stocks. The tech stocks can save the day if the market's going to be weak, but as of today, they did not participate. Here is the semiconductor stocks. You got down about 4 1/3% on the day. Basically, it's all because of one name, and it's not Apple. It's a company called Lumentum. L-I-T-E is the symbol. We just say light if you're talking about the stock. It's down 33% today, all because they hinted at the possibility that Apple was the one that asked them to materially reduce their shipments for their products. They make the facial recognition that goes inside of the iPhones. They said that one of their largest customers had asked them to reduce production. Everybody thought, oh, well, that's Apple, because the Nikkei last week came out with a thing in China that they were also, there was companies over there that were asking to be reduce their production as well, and they all blamed it on Apple. So we've seen this before when Apple reports earnings. We tend to see that Apple, everything's just fine, or at least not as bad as they thought. So, hey, for now, that helped take that stock down, but it also took Apple down on the day by 5%, breaking the uptrend here, by the way. If you were to draw a line straight up, we broke through the uptrend today on heavier volume. Yes, the 200-day moving average is there for you if you're interested, but, doesn't look too good there for that one. Interestingly, if you go through the other Apple suppliers, they also were crushed today. Skyworks Solution, 5%. Finxair, FNSR, had good results the other day, of course, but that gave back 4% on that one today. Broadcom, which is now AVGO, that one sold off 6.5%. And QRVO, that'd be Qorvo, also breaking the new lows there. All of this based on one thing. I mean, isn't that incredible? So that's what you basically have there. Semiconductors, weak on the day. That was a pretty significant down day for the semiconductors, if we're just being honest there. Okay, oil was higher actually to start the day. It actually was higher by 1%. You had Saudi Arabia saying that they will reduce the world's oil supply by 500,000 barrels a day for the month of December only as of now. And so oil was up about 1%. That was short-lived. So oil now down 11 straight days in a row. That took down energy with it. Anything energy related, you can see the loss there of 2%. Oil explorations, I can't say that. Oil explorers, right, also lower. But I tell you, one thing that wasn't lower today was utilities. Utilities for the last 6 months is the second best performing sector, second only to healthcare. For the last 3 months and up till now, has been the best performing sector overall in the entire market. And look at it, just sitting at those highs, ready to make its next move. Just been chugging along. Hasn't really got a lot of attention on that one, but it has been the best performer, right? For the last 3 months and for the last 6 months, second best performer. I mentioned healthcare was your second best performer. You could see it in there. Just a strong overall chart for that one there. Okay, we mentioned Apple breaking down there 5% on the day. How about some good stuff? American Airlines added almost 2% on the day. They were upgraded today. Oh, by the way, JetBlue also upgraded but didn't finish positive on the day. JetBlue and American Airlines were upgraded by Goldman Sachs. So Goldman Sachs is trying to get you to look away from their stock and look at somebody else's stock today. They said that, this is so funny. So they said that American Airlines could benefit from idiosyncratic opportunities which will ultimately drive earnings. What in the world does that mean? Like, why you got to use that language? Right? I used to work with these guys and they would use that language all day and I'm like, oh yeah, I could do the same thing, but I don't have to say it like that. Come on, make sure everybody can understand. We know you're the smartest guys in the room. You don't have to say it all the time. So that's what they said. American Airlines, positive on that one. And then they upgraded JetBlue. And they said that their cost-cutting efforts will increase profitability in the coming years. That's me simplifying that, by the way. That is not what they said. So you got JetBlue just kind of hanging out there near recent highs. Not incredible right there. But what's incredible, I'll tell you what, Limited Brands. Limited Brands added 1.5% today. Check this out. Wells Fargo, who I normally disagree with, they upgraded the stock to outperform. And they said that the L Brands, which is Victoria's Secret, we did a video on it, is on the verge of a massive turnaround. Who said that, right? Who did a whole video on that one, right? Just these guys are a little bit late to the game. It doesn't matter. The stock's higher by over 20% just in the last month alone. You can see it on the charts there, just coming off this low right here. I think they're right. I think they're spot on that one. Limited Brands has done amazing things in the last few months to sort of rebrand, right? Get re-going again there. I don't know another way to say it, but they've done a good job. Okay, Alibaba in the news today, Singles Day. If you're not familiar with Singles Day, that is a holiday that was created by one guy, very cool story, and has just exploded over there. It has now become a day where everybody just buys something for themselves. That's Singles Day. Used to be a day where you bought something for yourself if you were single. The rest of the world celebrates being a couple. This guy said, hey, if you're single, go buy yourself something on one day. and it's 1/1. So November 1111 is the day, right? So, and now it's become into this, it's a whole month. So if you're in China, if you live over there, you've experienced this in the last few years, basically everybody just buys something for themselves. It's an incredible free-for-all. They look at our Christmas, but our Christmas is sort of religious. Is established as religious for most people. But Singles Day, there's no religious belief or anything. It's just a fun day to go buy yourself something, and now it's become a fun month to go buy yourself something. Interestingly enough, comes from Alibaba. Alibaba shares were a little bit lower today, only because the rate of growth of Singles Day sort of has topped off. At least as of now, people are making that assumption. It was growing at a 39% a year. Now it's only growing at 27%, so that hurt them a little bit. Speaking of getting hurt, you got General Electric. That's going to be 7% lower on the day. CEO was basically on CNBC. They did an interview, and he said he has an urgency to reduce the leverage or get rid of debt, basically pay off debt, and sell off some of their assets. So another beat down for General Electric. $6 price target on the street for most analysts there. Look, the FANG names, if you follow that sort of thing, Amazon lower by 4.5% today, Facebook 2.75%, Netflix also got punished, 3% on that one. Just a volatile trading range in here. Like I said before, and I'll continue to say, the market's selling off aggressively through October doesn't repair itself automatically. I'll use the analogy of falling out of a one-story building. Every one of us are going to get up, after a little shaking it off, we're going to get up and walk away. If you fell out of a 10-story building, some of us, most of us, are not going to walk away. Those of us that do walk away aren't going to walk away right away, okay? So that's what the markets did. It fell out of a 10-story building. There's going to be a lot of people that think they found the bottom. There's going to be a lot of people that think this is the end of the world. There's going to be a lot of people that just simply think it's a discount, right? You have to get everybody back on the same page again, and if that means everybody believes that the markets are headed lower for a while, that's fine. That gets everybody on the same page. If we settle down here, everything sort of calms down, we'll get everybody on the same page going back up again. But right now, we have everybody, just ants, scattered all over the place, and every ant has a different mission. So sorry, this one's not live today. We'll hopefully get it fixed and ready to go for you tomorrow. And otherwise, have a great rest of your evening. Enjoy it. If I helped you in some way, maybe you'll hit the subscribe button. I won't ask anything else of you, I promise. Maybe one thing, but have a great rest of your day. See ya.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.